Hi, and welcome to this week's market presentation. Latest news. Over the past week, natural gas prices across most European markets saw modest gains over the coming months and through the first quarter of 2027, while electricity prices saw a more downward movement for the coming months, with price increases focused on the fourth quarter of 2026 and the first quarter of 2027. In the latest energy news, a fragile ceasefire between the US and Iran continues to be tested. Markets initially priced in a potential US-Iran ceasefire early last week before hostilities resumed, with the first attacks launched since April, with both Iran and Israel trading airstrikes against each other. A conditional Israeli-Lebanon ceasefire was announced but rejected by Hezbollah following the continued ground military operations by Israel in southern Lebanon and airstrikes in Beirut. Commercial traffic across the Strait of Hormuz remains minimal, with most tankers still blocked from moving across, although there is some movement, with a limited number of vessels having transited the strait carrying both LNG and crude oil. Overall, prices in crude oil markets over the past week saw significant volatility, moving below $93 a barrel for Brent on the ceasefire hopes before spiking towards $100 a barrel once again, and overall moving up and down as the hope for a ceasefire increases and decreases based on the incoming headlines. Markets remain highly volatile and must take into account that the transit through the strait remains halted, continuing the severe supply disruption to both crude oil and global LNG supplies. Weather. Looking at the latest weather forecast, temperatures across most of Europe are easing down over the coming 2 to 3 days, moving closer to slightly below the seasonal average across most of Western Europe, before once again returning to above average temperatures through the middle of this week and particularly at the beginning of next week. Precipitation will remain across much of Northern Europe over the coming few days before easing off once again through the weekend and beginning of the following week. Wind speeds are expected to remain on better footing throughout the beginning and middle of this week before easing off once again next week. Macroeconomics. On the latest macroeconomic front, a jobs report out of the US, which showed more job growth than had been forecasted, combined with the ensuing rise in inflation across the US economy, is increasing the market odds of an interest rate hike by the Federal Reserve instead of any further cuts, which could then result in slower economic growth out of the US. Over in the euro area, the European Central Bank is similarly looking at and discussing the prospect of an interest rate increase in the midst of rising inflation. Crude oil and LPG. Moving towards crude oil markets next, we note the volatility in the market. Overall prices for both West Texas crude and Brent increased over the past week in several volatile trading sessions. Overall, West Texas crude prices are up 3% for the front month, with Brent up 2%. Withdrawals from strategic petroleum reserves in several countries continues amidst the supply crisis facing global markets. In the US, the SPR continued its release for an 8th consecutive week, pushing stocks in strategic petroleum reserve down below the lowest levels we saw in 2023. And we see overall crude oil stocks in the US moving towards the lowest levels we've seen in over a decade. This is certainly raising concerns that if the blockade of the Strait of Hormuz and the lack of transit through the strait continues, by the end of the month, we'll be facing a more severe supply disruption and crisis, given the ever decreasing global inventories. Natural gas. Moving towards natural gas markets next, natural gas prices across Europe increased week over week. The increases were more concentrated through the remainder of 2026, up around 5.7% on average, with the frontier pricing increased by a little more modest 4.5% week over week. Overall, the increase in the price level is a reflection of the tighter supply for LNG globally and the impact it is having on the European total natural gas supply, with LNG imports decreasing further over the past week. Storage inventories continued increasing, with the level of injections being helped by the more favorable weather conditions, resulting in slightly lower total demand. Nonetheless, the storage level versus the previous year saw a further increase in the year-over-year decrease, even as the comparison versus 2 and 3 years ago narrowed slightly. We can see more clearly looking at the overall level of storage injections, which are just in line with the past 13-year average, though, as highlighted earlier, below last year's levels. Total supply saw a weekly decrease once again, pushing to 5-year lows, but again being facilitated by a similar decrease in total demand. The supply picture improved due to an increase in Norwegian gas flows as maintenance moves towards wrapping up across Norway's gas infrastructure. On the other hand, LNG sendouts and LNG imports into Europe continue to fall below the past 5-year average as price competition for LNG cargoes with Asia continues. Investment funds saw a slight decrease in the level of long positions in the market, resulting in a slight decrease in the level of net long positions, although market participants are still holding on their positions, likely due to the ongoing uncertainty regarding the situation in Iran. Coal. Coal markets saw limited movement over the past week. Coal prices for the frontier saw the biggest gains in Asia, largely driven by the ongoing production decreases in China as a result of the safety inspections following the mining accident a few weeks ago. Over in Europe, certainly the increase in natural gas prices, increase in the competitiveness of coal-fired power generation, but overall looking at a more stable evolution week over week. EU and UK emission allowances. European and UK carbon allowances saw a slight decrease in the price level over the past week, but nonetheless, particularly at the spot market, we're looking at a still bullish price evolution, with prices having increased slightly over the past month and certainly over the last quarter. On the UK side of things, the bullishness is more apparent, with noticeable increase in the price level month over month, up nearly 11% for December 25 product. Overall, the UK market is seeing a bullish pressure from the ongoing negotiations to relink the EU and UK carbon markets, while on the European side of things, discussion of potentially changing some of the current mechanisms and regulations to ease the pressure on the industrial sector, alleviating some of the current upward pressure on prices. Investment funds saw a further increase in the level of long positions in the market, in part due to the ongoing uncertainty regarding the current market situation, with market participants opting to hold on their positions. On the UK side of things, we continue to see the record high level of long positions in the market. Electricity. Lastly, moving towards electricity markets, we note the more limited movement in electricity prices in Germany, but also across Europe. For electricity, while the upward movement in natural gas prices added further upward pressure to electricity prices, the slight retreat of carbon allowances helped ease that upward momentum. Overall, we note the bullish pressure on electricity prices more concentrated in the fourth quarter of the year, up nearly 3.5 percentage points over the past week, while the front year is up minimally at just under 0.8%. The price evolution was quite similar across other European markets as well, while the Nordic region saw additional bullish pressure, largely driven by the concerns over the Nordic hydrological balance moving forward, given the lower reservoir levels we continue to see. European total grid demand saw a slight decrease over the past week, moving now in line with the past 5-year average. Nonetheless, the output from renewables increased slightly over the past week, pushing non-dispatchable supply up to a record high for this time of year, while residual load was pushed now to a 5-year low. Looking at non-dispatchable supply, we note the increase in wind power generation moving in line with the evolution we saw in 2025. Solar power generation, while decreasing over the past week, remained at record levels for this time of year, pushing total solar power output to date to a new record high. Hydro run-of-the-river generation remaining below the past 5-year average. Looking at residual load next, we note the further decrease in the share of fossil fuel power generation as a result of the slight uptick in renewables, helping ease demand for both natural gas and coal-fired power output. Overall nuclear power generation remained relatively stable over the past week. In terms of the French sector, there's only some concerns over hot summer weather impacting the cooling needs of nuclear reactors there, but for the moment, nothing too concerning to report. Lastly, looking at guarantees of origin, we note a further uptick in the market following the decreases we were seeing over the previous month. Overall prices now up around 10% for 2026 year production, up a little more for 2027. Overall, guarantees of origin pricing continues to find support from the persistent Nordic hydro deficits, as well as the more limited growth we are seeing in terms of wind power generation year over year, both contributing to tighter supply expectations moving forward. That covers this week's market presentation. Thank you for joining.